So it's Wednesday. I haven't traded at all this week. I didn't even turn my computer on Monday. Didn't turn it on yesterday. And the reason for that is, we're stuck in balance, right? And I'm not opposed to trading balance ranges. Sorry. I actually quite enjoy trading balance ranges, but given the type of action that we've had on Monday and now yesterday, we went from what potentially could be a structural balance range to what is turning into a value balance range. And for me, once you get into a value balance range, the market becomes far more tricky to read. I find the price action starts to become very, very sloppy in a way. And it's really, in my opinion, just a more dangerous market. So, as I'm watching this market right now, it's about clear as day is what's happening, right? We're balancing at the all-time high. Again, this is a common theme we've seen over and over again in the market, where we push up to a new price level. Price is not naturally being accepted, although it will look that way because, a lot of times when we go to balance, we think of it as prices being accepted at new levels. Whereas more, I look at it as far as where we are right now, being at the all-time high. I more believe that price is being rejected at these levels, and that's why the balancing is occurring. And because of that, we've seen time and time again, we get up to the all-time high, we get into this balance range, and the next thing we liquidate off, similar to what happened, middle of July, and then we find a buy the dip opportunity. They buy it. It has a strong rally, right back up into a new all-time high, right back into a new all-time high balance range. So for me, I'm really just not that interested in trading this market right now. I really am not. A lot of it comes from the fact that I know August is a very, very poor month to be trading. It's quite commonly one of the harder months to read just because it is coming into the end of summer. But the last 2 days give me the idea that, I've probably made a good decision as far as stepping back. Now, I will sit in front of the computer today. I will monitor the markets again today, more so for my RTY, because RTY is really, really struggling with breaking above very mechanical references, being your 50-day moving average and your 21-day moving average. But as we're here, let's take a quick look at ES and kind of see where we're at. And, I'll give some potential ideas on what I would be looking for if I was to enter a trade. Now, I don't expect to make any trades today. I will make a trade in the ES once we break from balance, whether it's a break to the upside or a break to the downside. At that point, I will enter into a trade. But like I said, due to how this value balance is starting to build from Monday and now to Monday, Tuesday, and potentially today, it's becoming less and less attractive to do business inside, that 64, 66 level to, the 06, the 09 range as well. So anywhere in between there is a chop fest. And you've kind of seen it, when I went back and started doing some homework on kind of what's taking place in the markets this week especially, is you have very, aggressive price action in small time frames. So, on Monday, you had really just balance, A, B, C, and D was looking to balance. You had an aggressive move in E, and then you just had more balance in F, G, H, I, J, K, and then you had another L and M aggressive move. So really, when you're looking at the day, you had an hour and a half of aggression in a directional move, right? That's it. The rest of the day was choppy, balancy, very, very dangerous market to be involved in. Similar to that, yesterday, obviously a little bit better range. And although I do think this would have been a great buy opportunity against what is very strong structural support, being down there 64, 66 area, you really just had balance. You had the initial balance creating in A and B, and then C and D were inside to that. And then you had that one strong, aggressive inside bar break in E period, which then did what, right? It pushed you back into F and G balance. And from there, you kind of had a melty uppy type trend day. Now what you're seeing again is Globex failing to find an aggressive buyer. They continue to fail to find a buyer above 08 to push us over 44.22. And because of that, you have to look at the potential to possibly fade this market on any attempted break above 08. Above 08, they're struggling to find a buyer, monitoring the market to see if they continue to struggle to find that buyer like they have time and time again is going to be the strongest odds for the day. If the market does trade above there and fails back through, I think that's a strong opportunity to fade the market for 64 retest or at least middle of the balance range. Now, I'll leave that up to you. And, trade your plan, but my plan would be I would look to fade any failure above '08. You can use that all-time high as your backstop. I think there's different opportunities, but overall, I think that would be the strongest move in the ES coming into today. Sorry, my daughters are being foolish. Sorry, my apologies, my daughters. So here I am, that's what I'm looking at in ES. R2Y, R2Y to me is the most important market right now. And the reason for that is I've said this before, and I don't want to keep sounding like a broken record, but R2Y is the one market that when exceptionally strong rally, remember this crazy move we had in R2Y, and it's the only market, in my opinion, that found strong structural balance, meaning it's not just a 1 day, 2 day thing. It's a week up, a week back, a week up, a week back. And you see that in how the market has traded, right? It's not just 1 day or 2 day aggressive push higher like we're getting in ES, but it's more of a natural balance range where you're getting a push higher, liquidation, failed selling, push higher, liquidation, failed selling, so on and so forth. It's the same process, which I've said before, when you start to get strong structural balance like this, the opportunity is there for a market change, not just, a short time frame change in the market, this direction, that direction, but an overall directional change in the market for a longer time frame. Now, I'm not saying 7, 10, 15 years, but I am saying longer than 1, 2, 3 weeks, maybe 3, 4, 5, 8 months, something like that, right? So as I'm watching R2Y, they definitely failed once again below the balance range. They have pushed it back up. But what's interesting with R2Y right now is the fact that the 50-day moving average is becoming strong resistance. And not just that, the 21-day moving average has also worked as very strong resistance. So keep in mind, R2Y is an exceptionally mechanical market in nature. It's very retail driven. So you do get a lot more mechanical references that hold, because that's what the participants are doing. It's a different participant pool than what you see in the ES. ES has strong money, a lot of big money. R2Y is more the smaller brother, the littlest brother of the family, where it's not as big or as interesting to the big money. So very mechanical in nature. I do find it quite interesting though, that the market itself is struggling at these very visual references, which tells me the buying may not be as strong as maybe I was hoping it would be. But at this point right now, as far as R2Y goes, when I'm looking at the profile, I need to just take what the profile is telling me. And what the profile is telling me right now is, what is happening in R2Y over and over again. R2Y has tried multiple times to get above 2210 and run away from it. There's been a few, get a little bit carried away. There's been a few chances or a few days where I thought, here we go. It's finally going to break. And what it continues to do is each and every push away. Now, keep in mind these levels here, 2244 and 2226 are levels that come from a structural point as well. But each time they're pushing up into these backstop type levels away from 02 to 2210 is they're finding a seller. They're not finding a buyer. And this is what I mean by when you're watching a market for continuation, or you're watching and monitoring the market for continuation, you need to see a new natural buyer enter the market if you're looking for an upside move. You want to see somebody not just buy a period and run it up and then see them sell it off for the rest of the day. You want to see a trend away from this level. You want A, B, C, D, then a fade, then continuation, right? You want to see a strong buyer enter the market. When we go back in time here and we start looking at what's happened each and every time in and around this 02 level, every time they've broken above this level, the same process is taking place, okay? A period runs it up, you get some sort of balance, and then you get the liquidation, right? A period runs it up, you get some sort of balance here, then you get the liquidation. This day is a little bit different. This is the day where I thought change may occur and we may finally get that buyer, but what happens the next day? You get balance, then you get A period, run it up, liquidation, right? A period, run it up, liquidation. It's the same process over and over again. Now, the most important aspect of this is the sellers aren't winning below here either. The sellers are not doing a good job of selling us below that level, just as well as the buyers aren't doing a good job of buying us above that level. So For me, RTY is a hands-off. If you're in the swing with me, you're in the swing with me. Your average should be exceptional at this point. You should be, well in the money. But nonetheless, hands-off as far as building in or entering into any kind of trade in RTY until we find somebody who wants to take control either above 2210 or below 2202. And until that happens, my hands are off. It's a market just to monitor based off of how they have been trading it. There's no natural buyer above. There's no natural seller below. What you have is balance in and within that range. So that's where I'm at with good old RTY right now. Now, taking a look at NQ, NQ to me is such an interesting market because time and time again, I continue to say this and trust me, repetition is very important, sure. But it even annoys me saying the same thing over and over again, but you have to do it. You have to train your mind to be able to recognize what the markets continually are doing in order to effectively, attack and extract from it, which is what our job is, extracting money each and every day. As I'm watching our NQ, it's the same thing, kind of what we just talked in RTY, this upper blue trend line. I'm not a trend guy. I hate to continue to repeat that, but in NQ, it seems to be working quite well. There's just no buyer above there. There's the same thing as what we're seeing in RTY right now. NQ significantly struggles to find a great buyer to trend us away from that upper channel area, that upper trend line. Sorry, my nose is itchy there. And until they do that, I think the trade is continually looking to face, what looks to be strong, but understanding because of what we're looking at here on the day time frame, weak moves away from that level. And likewise, buying any move down towards our purple trend line, which is by far the strongest one. As the market sits up here and just chills, hands off. Again, there's a reason I came into this week and decided, Monday, I'm taking the day and taking the Canadian long weekend and hanging with my family. And yesterday I said, I think I'm going to go golf instead of, sitting in front of the computer again. Not just the fact it's summer and I want to make sure I get some rounds in, but because the market I just don't think is setting up for any kind of great trading right now. And that's fine. I talk to the guys in the TradeUp room all the time about, take advantage of the break, take advantage of the slowness of this market to drag yourself away, to take your mind out of it and go enjoy your life, man. Don't just be trapped in this market. There's a couple things that happens when you get trapped in trading and you think you got to trade every day. One, you get burnt out. Two, it goes from being a passion and a job to an addiction. And as soon as you get addicted to the market, you're no longer a trader. You're simply an addict, right? So it's important to take those steps to get away from the market, because if you don't, trust me, I've seen it, and it's even happened in my own trading career, where you go from being a professional to an addict, and then you got to go through the whole psychological thing again, hire in those professionals and get yourself square. So do yourself a favor. August isn't the time to get rich. We're going to have plenty of opportunity when the big money starts to re-enter this market. Let's just, be patient, be calm, and allow that to take place. As I'm watching NQ here, NQ, like I said, we can get it from the day time frame, but as I'm looking at the profiles, NQ is just doing the same thing, putting in a lot of poor profile structure, but it is respecting a lot of the structural references. It's still respecting a lot of these structural references below us, and most importantly, above us. The 116 to 124 level continues to work as strong resistance. This, 32 to 52 area has worked as support, has worked as resistance. It's still a good level to monitor for a potential of change in the market. Now, keep in mind, nobody, unless you've taken the profile series with me, you don't understand really how I'm looking at these levels. Most people are looking at these like, oh, look, sometimes they stop right in it, or sometimes they trade below it. These are structural references to observe in the market, and to be able to observe them correctly and use the information they're giving you correctly. Time in front of the screen is going to be your best friend. But for me, NQ, I think, is a very fadeable market, simply based off of what ES is doing as well. Any move towards 116 that fails and continues to fail any sort of, aggressive buyer, I think is an opportunity to short the market, with your target being 32.52. Likewise, any move into 32.52 or just below that fails to find, an aggressive seller, any cross back through it or failed at it is an opportunity to get long the market and just target that 116 area. I believe doing business inside this area is going to be detrimental to your trading. I think it's very choppy. You're going to get wide balance ranges, and you could eventually get hurt or be on the wrong side of the breakout when it takes place. And you don't want to do that. You want to wait and monitor for the breakout, at which point you have a clearer picture. Then you can enter the market, sit back, be calm, and allow the market to work for you. So NQ, again, should be no surprise here. I don't think it's tradable. I don't think there's going to be exceptional opportunities. And because of that, like I said, I will monitor the market today. I will observe the market today because of the few things that we've gone over in this prep. But I think the profiles are giving us a pretty good idea that it's okay to just step aside, maybe, just observe what's happening on the price action, observe the tape, maybe spend some more time watching the tape if that's something you want to improve on. You don't have to trade every day, every week, or every month. It's like a sickness that's become of what trading is actually. And trading is about positioning yourself around theses, whether your thesis is a day time frame, a weekly time frame, a yearly time frame. Whatever your trade plan is, your job is to trade around that plan and execute it as it is planned. So if your plan is to trade, for a couple ticks here and there, so be it. Trade your plan. Now, I think that's detrimental and you're not going to get anywhere with it. But, over time, I think as you mature in this business and in this career, you start to recognize where opportunity is. And for me right now, I just don't see the opportunity in this market. And I think that's one of the reasons I decided to, kind of push ahead with this profile series. And we'll see if the profile series, what happens with it. But if you're interested, check out the website, TradeUp, there's still obviously some spots available. But with that being said, if you have a good plan today, execute your plan as is. If your plan doesn't work, go back at the end of the day, recheck it, and see how it played out, and change it as is. So that being said, thanks for jumping on with me. I'll see you guys again tomorrow, and trade well and trade safe.